Defending your money stops you from going broke, but offense is what sets you free. In our first 50 rules, we established how Alex, despite making $6,500 a month as a freelancer, was bleeding cash through invisible $240 subscription leaks and an $8,400 credit card fire. Meanwhile, Elena used her modest $3,200 teacher's salary to build a bulletproof $12,000 emergency reserve and eliminate her debt completely. But patching the holes in the boat is just step one. Once the boat stops sinking, you have to start rowing. Welcome to Part 2. Rules 51 through 100. This is the explicit roadmap for scaling your earning power, activating automated investment vehicles, protecting your net worth, and transforming raw information into unshakable daily habits. Let's start with the engine, your earning power. Rule 51. Your income is not fixed. Treat your current salary as a floor to build upon, not a ceiling that dictates your lifetime value. Rule 52. Your primary skill is worth more when you change the business model. An hourly freelancer earns linearly. A consultant who packages their expertise into high-ticket, fixed-price projects breaks the time-money link. Rule 53. A second income stream should focus on high margin and low leverage. The goal is one stream that does not collapse if your main job hits a rough patch. Rule 54. Before starting any side hustle, identify the exact dollar value problem you are solving. Generic help gets generic pay. Specific solutions get premium rates. Rule 55. Raise your prices systematically. If you haven't adjusted your rates against inflation and your increasing experience over the last 12 months, you're taking a silent pay cut. Rule 56. Your professional network determines your income ceiling more than your raw talent does. Build deep relationships with 5 key people who respect your execution, rather than broadcasting to 5,000 strangers. Rule 57. Do not spend capital to build an income stream you haven't validated yet. Prove someone will pay you real cash for your service before you buy a $500 website or premium software. Rule 58. Tax drag will destroy a side business if left unmanaged. If you take on extra contracts, immediately sweep 30% of every check into a sub-account titled Taxes. Never treat gross income as spendable cash. Rule 59. Investing in your own high-value skills has an infinite return. A $1,000 certification that allows you to charge 20% more on every contract beats any return the stock market can give you this year. Rule 60. Calculate your precise hourly baseline. If you make $40 an hour, spending 3 hours running an errand you could outsource for $25 is a net loss of $95. Know what your time costs. Let's look at the income adjustments. Alex finally stopped working for his old hourly rates. He repackaged his development services into a fixed-scope asset and signed a new client for a flat $3,500 fee, effectively doubling his hourly yield. Elena didn't change jobs, but she packaged her teaching experience to launch a private weekend tutoring program at $60 an hour. Within 1 month, she added a clean $480 of pure extra income to her monthly baseline. Now the part that changes your future. Automated investing. Rule 61. Compound interest requires absolute emotional patience. Money that earns a return, whose return then earns a return, builds an exponential curve that looks completely flat for the first 10 years before exploding. Rule 62. Time in the market beats timing the market every single time. Starting 10 years earlier with half the amount of money routinely beats trying to invest double the amount later in life. Rule 63. Missing an employer retirement match is rejecting free money. If your workplace matches up to 4%, contributing 3% is literally throwing away a guaranteed 100% return on your capital. Rule 64. Low-cost index funds beat the vast majority of professional active managers over a 10-year horizon. Fees compound in reverse, eating your wealth. Broad market index funds give you diversification for a fraction of a percent. Rule 65. Eliminate decision-making from wealth building. Set your investment contributions to transfer automatically the exact day your income hits your checking account. Rule 66. Checking your investment balance daily is a behavioral trap. High frequency creates emotional volatility, leading to panic selling during normal market corrections. Look at your portfolio once a quarter. Rule 67. A market correction is not a financial disaster. It is a liquidation sale. When stock prices drop by 15%, you are buying the exact same global companies at a 15% discount. Rule 68. Utilize tax-advantaged accounts like a Roth IRA or Workplace 401k systematically. Understand whether your strategy benefits from tax-free growth now or tax-free withdrawals later. Rule 69. Ignore financial media noise and viral trends. By the time an investment asset is being celebrated on social media, the institutional money has already captured the margin and left. Rule 70. True diversification means owning assets that react differently to the same economic weather. If all your investments go up and down together, you aren't diversified, you are just exposed. Let's look at the investment engine. Elena set up a completely hands-off monthly transfer of $300 into a low-cost total market index fund. She hasn't logged into the portal in 5 months, allowing the system to buy shares at a steady average price. Alex tried to trade a viral tech stock with $2,000 of his rent money, watched it drop 25% in 48 hours, panicked, sold it for a $500 loss, and realized he was playing a losing game. Now long-term maintenance and macro defense. Rule 71. Run a comprehensive quarterly financial review. 12 weeks is the perfect distance to spot a spending trend before it alters your net worth trajectory. Rule 72. Cash is a depreciating asset due to inflation. Keeping $50,000 in a zero-interest checking account means you are silently losing purchasing power every single year. Cash is for liquidity. Investments are for wealth. Rule 73. Insurance is the shield that preserves your capital. Skipping health or disability insurance to save a double-digit premium leaves your entire net worth exposed to a single accident. Rule 74. Explicitly audit your beneficiary designations on every active account. Outdated legal paperwork can override a written will, directing assets to the wrong place during a crisis. Rule 75. The true cost of procrastination is not linear. Delaying your retirement savings plan by 5 years can literally cost you hundreds of thousands of dollars in terminal portfolio value down the road. Rule 76. An effective financial plan should be profoundly boring. If your strategy feels thrilling or requires daily adjustments, you aren't building wealth, you are gambling. Rule 77. Keep your core living baseline flat, even as your contracts scale. True financial independence belongs to the people who expand the gap between their income and their consumption, not those who upgrade their car with every raise. Rule 78. Social comparison is a silent balance sheet killer. Spending real cash to match the lifestyle narrative of a colleague means you are financing their illusions at the expense of your actual freedom. Rule 79. Evaluate housing based on absolute structural cost, not maximum loan approval limits. A house that consumes 45% of your take-home pay is an anchor, not an asset. Rule 80. Align your financial values with your partner through scheduled, transparent discussions. Financial silence breeds resentment. Structural alignment builds an unshakable team. Rule 81. Information without immediate execution is completely worthless. Reading an investment blueprint changes nothing until you change the parameters inside your bank routing dashboard. Rule 82. Identity dictates long-term behavior. Stop defining yourself as terrible with numbers. Shift your internal narrative to, I am someone who tracks my assets, and your automated choices will align with that identity. Rule 83. Employ habit stacking to lock in financial maintenance. Review your weekly transactions on the exact same morning you run your household laundry or complete your Sunday planning. Rule 84. Weaponize friction against your worst consumer impulses. Unlink your saved credit card information from your desktop browser and wipe delivery apps from your phone screen. Rule 85. Calculate your absolute net worth once a year on a fixed date. Your total assets minus your total liabilities is the only metric that matters. Watch that single trend line. Rule 86. Install an accountability structure. Share your explicit debt payoff or savings targets with a trusted partner. Isolation fosters rationalization. Transparency builds discipline. Rule 87. Reward your process victories, not just your terminal numbers. Celebrate completing 12 months of automated saving rather than waiting until the entire fund is filled. Rule 88. An executed 80% plan completely outclasses a perfect 100% plan sitting on a hard drive. Avoid overcomplicating categories. Build a machine simple enough to run when you are completely exhausted. Rule 89. Remember that capital is merely a tool to buy autonomy over your hours. The ultimate goal is not a massive vault. It is the absolute freedom to choose your work and protect your peace. Rule 90. Initiate your momentum immediately. Do not wait for next month or a calm season. Execute one tiny financial adjustment within the next 5 minutes to signal to your brain that the plan has begun. Look at the final shift. Alex unlinked his credit cards from his browser, deleted his food delivery apps, and set up a hard rule. 30% of every freelance invoice now automatically routes to a separate business tax account. He hasn't missed a deadline since. Elena used her extra tutoring income to expand her index fund transfer from $300 to $600 a month, compounding her future twice as fast without changing her core lifestyle. Rule 91. Isolate 3 micro moves to trigger immediate momentum. Trying to absorb a massive inventory of advice paralyzes execution. Narrow your focus to a tiny trio of changes, lock them down, and ignore the rest until those 3 feel automatic. Rule 92. Reject the temptation of the total weekend overhaul. Radically redesigning your entire financial lifestyle by Friday guarantees a total systemic collapse by Monday morning. Micro adjustments scale, sudden shock therapy fails. Rule 93. Stitch one new financial checkpoint into your weekly landscape. Elena's routine flourished because she didn't build a complex ritual. She just anchored a rapid, friction-free 5-minute account check to her regular Sunday coffee. Rule 94. Remove human choice from your wealth-building defense. Willpower scales down when stress scales up. By automating your basic saving targets, you ensure your future self gets paid before your current exhausted brain can spend it. Rule 95. Engineer a highly visual scoreboard for tracking debt reduction. Keeping numbers hidden feeds anxiety. Bring your liabilities into the light. Sketch a simple progress tracker on a wall or a basic file, and give your brain real-time visual evidence of your progress. Rule 96. Execute a monthly operational audit on your strategy. Dedicate a specific day to look at the machinery of your budget. Evaluate what jammed, celebrate what flowed, and calibrate the parameters for the next 4 weeks. Rule 97. Grant yourself immediate operational amnesty when a mistake occurs. A single chaotic weekend or an impulse purchase does not invalidate months of tactical building. Forgive the leak, reset the parameters, and step back onto the track immediately. Rule 98. Establish a hard boundary where consumption must transform into execution. Accumulating an endless library of content can become a sophisticated mechanism for procrastination. If you aren't actively applying the last insight, reading the next one is just a distraction. Rule 99. Trigger a micro-victory within the next 60 seconds. True behavioral shifts start with microscopic friction points. Terminate one dead subscription, shift $10 to an isolated account, or audit one credit statement right now to break the inertia. Rule 100. Anchor yourself to the reality that systems build freedom, while definitions simply watch. Theoretical literacy never paid a single bill. The map is incredibly useful, but it means absolutely nothing if your habits refuse to walk the road. 12 months after opening this 100-rule blueprint, Alex and Elena's financial realities went through a massive, asymmetric transformation. Let's look at the numbers. By implementing his new packaging strategy and killing his hourly rates, Alex aggressively reduced his credit card debt from $8,400 to just $2,100. For the first time in his adult life, he built a rock-solid $3,500 emergency fund. But the biggest change wasn't on his dashboard. It was in his nervous system. He finally stopped living in a state of chronic, low-grade financial panic. He stopped checking his banking app with dread. Meanwhile, Elena's quiet machine performed exactly as engineered. Her automated total market index fund portfolio crossed $8,500 in pure, uninterrupted contributions. Her liquid cash safety net sat at a bulletproof $15,000, giving her a full 6 months of absolute structural runway. They were both winning, each at their own pace, for one single reason. They both chose automation over willpower and execution over information. The hidden trap of comfort, the 18-month wall. But here is what happens next, the part most financial channels completely ignore. Around month 18, a new invisible enemy appeared. It wasn't a sudden crisis, it was the trap of comfort. When Alex looked at his dashboard on a random Thursday and saw a positive balance, his brain instantly tried to sabotage his progress. The immediate pain of debt was gone, so his old identity woke up. He thought, "I've been working hard. I have the cash. I can afford a $1,500 lifestyle upgrade right now." Elena faced a different ghost. Watching her cash reserve sit quietly in a boring high-yield account, while people on social media shouted about viral, volatile tech stocks, created intense psychological friction. This is the exact breaking point where the knowledge-action gap opens up again. When you are no longer desperate, keeping the system running requires a different level of identity shift. Alex had to realize that his automated routing wasn't a restriction, it was his freedom machine. Elena had to accept that a boring financial strategy is the only one that scales without destroying your sleep. The 5-year horizon. Who actually wins? If we fast forward 5 years into the future, the compounding gap between these two approaches becomes a canyon. Alex didn't become a billionaire overnight, but he permanently broke the freelance feast and famine cycle. Because 30% of every invoice automatically routed to his business tax account, he never faced another surprise IRS crisis. His consulting rates stabilized, his debt hit zero, and his net worth scaled to a clean $45,000. When his primary client unexpectedly paused production for 2 full months, Alex didn't sweat. He didn't take a bad contract out of desperation. He looked at his runway, took a breath, and quietly chose his next move. Elena still drives the same modest hatchback to her school. She didn't buy a luxury lifestyle, but her boring, invisible $600 monthly index fund transfer completely altered her net worth trajectory. After 5 years of market corrections, dividend reinvestments, and mechanical execution, her portfolio combined with her weekend tutoring income crossed $65,000. Elena is wealth building in the dark. Her lifestyle is structurally weightless because she expanded the gap between her income and her consumption. The difference between Alex and Elena was never intelligence. It was never raw income. It was never luck. It was simply what happened on ordinary Tuesdays when nobody was watching. It was the automated transfer that executed quietly at 2 a.m. while they were asleep. It was the deliberate, friction-backed decision to close the food delivery app when fatigue set in. It was the choice to look at the raw numbers on the balance sheet, even when the numbers hurt. Your machine begins in the next 60 seconds. These 100 rules conclude the entire financial blueprint, but their dynamic value relies entirely on the choice you make within the next 5 minutes. Right now, you have 2 distinct paths. You can close this video, feel a temporary surge of inspiration, go to sleep, and let your bank account remain exactly where it was yesterday. You can continue to be a consumer of financial information, treating books and videos as a substitute for real-world movement. Or you can take a single rule from this 100-rule series, build a tiny, friction-free system around it on your banking dashboard, and let it run. You don't need a total lifestyle overhaul by tomorrow morning. That guarantees systemic failure. You need a micro-victory within the next 60 seconds to break the inertia. Open your banking dashboard right now. Log in, look at your statements. Find one dead, recurring $15 subscription you haven't opened in 6 months and terminate it. Set up a mechanical, automated routing rule that shifts just $20 from your main checking account to an isolated savings account the exact day your income drops. Signal to your brain that the old parameters are officially dead. The map of the road is entirely in your hands. The systems are laid out, the metrics are clear, and the behavioral traps have been exposed. But the map means absolutely nothing if your habits refuse to walk the road. If you want to understand personal finance in a simple, clinical way, without the confusion, the fake hype, or the lifestyle flex, subscribe to the channel. We talk about money in a tactical way that regular people can actually execute, so you can make better choices with what you have, and build a life with massive emotional breathing room. The machine is ready on your dashboard. Now, go change the parameters.